Hi guys, with me again Aji Kurniawan Yusuf, and in this video we're gonna talk about 4 issues about stock, dividend, also capital structure that you should know, moreover if you are the investor. They are stock split, reverse stock split, stock dividend, and also recapitalization. Don't worry, it's easy. First is stock split. Stock split is action taken by a firm to divide its existing share into multiple shares. For example, stock split 1/2. It means if you have one stock right now, your stock will be doubled into 2. If you have 4 stock right now, your stock will be 2 times 4. It equals to 8. How about the price of the stock in this case? Because the stock split 1/2, the price will be half. If in the beginning you have 4 stock with the price of $20, so right now because of stock split you will have 8 stock, 4 times 2, but the price will be 20 divided by 2. So the price will be $10. So what you have before and after stock split is the same, $80. Then why does the company conduct stock split? Because sometimes the price of the stock has been so high, so investor is hard to purchase the stock because it is so expensive. To increase the liquidity of the stock, the company do stock split so most investor could purchase the stock. In the previous case, you can see, right? The price of the stock from $20 become $10. It is more affordable. So stock split is good signal for the investor that the company is in good condition and wants to make its stock more liquid. The next one is reverse stock split. Reverse stock split is action taken by the company to make the existing stock into fewer. That is the opposite of stock split. So for example, reverse stock split 1/2. If you have 4 stock with price $20, so your stock after reverse stock split is 2 stocks with price $40. So you have less stock while the price is higher. So you divide the number of the stock and multiply the price of the stock. Company does reverse stock split because the price of the stock is too low that don't give any trust to the investor. Usually, this is the signal that the company is in distress. The third is stock dividend or scrip dividend. Stock dividend is payment of dividend using stock. So you will not get cash dividend, but the payment of dividend is given in the form of stock. For example, 5% stock dividend. It means if you have 100 shares right now, you will get additional 5% times 100. It is equals to 5 additional shares. This type is done when company wants to give reward to the shareholder, but they don't want to spend any cash because they want to preserve the cash for the investment. Moreover, stock dividend gives tax advantage for the investor. So stock dividend gives good signal of the company to the investor. The last one is recapitalization. So recapitalization is restructuring capital structure of the company. For example, in the beginning, the company has 40% debt and 60% equity, but they want to restructure into 50% debt and 50% equity. In this case, they can do this by issuing debt. They borrow the money, right, to increase the debt to purchase back the equity. Or we call this as share repurchase or stock repurchase or stock buyback. When the stock price is dropped, they repurchase their stock so their equity financing decrease. As we know, in the signaling theory, good performance company tend to use debt compared to the equity because they don't want to share the profit to the shareholder. Well, if they use debt, they only need to pay fixed interest. So if the company buy back the stock or the share, or the company do the stock repurchase, it is good signal that the company is in good condition. So when the company buy back their stock or they do stock repurchase, it is good signal that the company is in good condition. But the company that has high debt ratio, they can also do the recapitalization that we call as equity recapitalization. So they issue new stock to pay its debt, to reduce the debt ratio. So they try to minimize the debt to minimize the risk. That's all about stock split, reverse stock split, stock dividend, also recapitalization. Hopefully that you get a lot of insight from this video.